cash would be debited. Stockholder increase, common stock increase, I call it CS. Increase means credit. So how we write it down, these transactions? First, this is a universal rule. There is no logic behind that. It's a universal rule, a convention that every person in different continents and different countries, they write the transaction as first the debit and then credit. So what is debit here and what is credit? Cash is debit and common stock is credit. So you write down first the debit one, cash. So there are two columns here, debit and credit. It's a debit. So you write down cash. How much? 50,000. And then you at least one tab here, a space, and then you write common stock, 50,000. So you see, in this case, equation is balanced. 50,000 is equal to 50,000 at the end. If you add it down, it is 50,000, it is 50,000. So debit must be equal to credit at the end, right? And here, before closing this entry, you write down some explanation. For example, anything you can write it down for to explain this entry. Issuance of common stock against cash. Or whatsoever, you can write it down. So let's see a very nice writing here, because my writing is not very good. I hope you neglect that. So you see cash, debit, common stock, credit, issued common stock. So this one is the optional. You can write it down for your own convenience, because if a layman, if read this kind of stuff, cash to common stock, he will not understand what's happening here unless he reads some kind of explanation. Oh, this 50,000 is issued against cash. If you are expert, then you don't need to write it down, because you already know that if cash increase, common stock also increase. So it means it is a case of when company issued stock and received cash. Everyone understand this transaction? We call this recording the transaction. Understand? Everyone. David, Ajam, Jordan.
Yes, I understood.
Me, Min, Ping Ping, Sipaday. Right? Okay. So, and let's talk about posting. First one is recording the entry and then posting the entry. For posting the entry, it means this amount has to be posted in the books of account. Like I told you, every account has a physical book behind. This is not just cash. There is a cash book. This is not just common stock. There is a common stock book over there, physical book, right? And then you need to post over there, right? And posting, the name is called ledger or account. Okay, so we have individual accounts. For example, in assets, cash is individual account, right? Accounts payable is the account for liability, right? Common stock is the account for stockholder equity or equity account, right? So all the individuals account combined make up the ledger. So you make every accounts. So in computer, what happened? If you double click on the cash account will open. If you double click the accounts payable, it will open. And in Old times, if you want to open the books, you go to the cash section. There's going to be not one book, there are a lot of books. Why? Because company has a past history as well, right? So on the cash book, there would be written like cash book from 1990 to 1992, from 1992 to 1994. It's like that. So there are different book sections, right? And then currently it's 2021. So you go and pick the latest one and you just open up and just post the entry over there. So how you post? So let's talk about this. So if it's a book, the book looks like, so we simplify this. Basically, this is a book. We simplify this in a T account. We call this T account because this is a T, right? So there is a right hand side, there's a left hand side. And we already talked about the left hand side is called debit, right hand side is called credit. So look at this entry. Cash debited 50,000. On the cash, this is the cash account, you write it down 50,000. But how we know that where this 50,000 came from? So we write it down here April 1. So that when you in computers, when you click here, it will open this page, April 1. This was the entry, right? So on common stock, it is written on the credit side 50,000, April 1. Now in some books, they don't write just 50,000 or April 1 here. They also write here because common stock is 50,000 credited by whom? Cash. On which date? April 1. Cash is debited by whom? Common stock. Which date? 1st of April. Right? So it's up to you. If you want to write it down, the explanation, up to you. But concept should be very clear. So April 1. April 1. So this stuff that we did, we call this recording or journal. And this stuff is called posting. When things are coming from the journal to their accounts, we call this ledger. Okay, or posting. Okay, if the question says post these entries or post the transactions, it means the question is asking, if this is A and this is B, question is asking A plus B. You first record it and then post it into their accounts. Right? So is there any rocket science here? Jordan, Ajam, David, Junpyo, Sipade, Ping.
Is there any what? Sorry?
Is there any rocket science here?
No.
No,
Right? It is tough.
I think it's easy. Yes.
Yeah.
Right? But when the questions come, definitely you will be confused. You say, what's going on here? Sir, we didn't read this kind of stuff. So that's why I'm right now going slowly, and then I will be increasing my pace because this one is very important right now so that you understand. Rather thinking in terms of, thinking 2 or 3 minutes to digest, you bluntly say that, okay, this account is credit, this account is debit, right? So I'm just building up all these, information there so that you digest easily, right? So debited is 50,000 and then 50,000. So the flow of accounting data, I told you, first the transaction occur, it has to analyzed which account is going to be hitting and how increase or decrease, and then you make journal entry and then you make ledger. Now, the difference between accounting equation journal, and ledger, right? So some students say that if this is credit or debit, then how it will be balancing our equation, accounting equation, right? So now we will see, or we will compare the accounting equation with journal entry and ledger entry, ledger posting, right? So business received 50,000 cash and issued stock to the owners. If we use accounting equation, what will be the solution here? In assets, we write it down cash here. Cash is increased by 50,000. And in stockholder, we call this common stock, increased by 50,000, right? Equation is balance. But when we post in a journal, so I didn't write it down like here, particulars, debit, credit here. So don't worry about that. Okay. So it's automatically mean by first there is a debit, second there is a credit column. Okay. So how we write it down the entry here? Cash increase,
50, so it's debit.
stock increase. Very nice. And how we write down the entry? First we write it down debit. So we write it down cash. And how we pronounce this transaction?
What do you mean how we pronounce? Writing it,
It's journal.
recording?
So how we pronounce this entry? We pronounce cash to common stock,
Oh, okay.
right? Let me write it down
Yeah.
here. Let me change the color and write it down here. We pronounce the journal entry as, cash to common stock. So when I pronounce cash to common stock, so we are following the international convention or international, there is no logic behind that, but still international convention, that is cash to common stock. It means cash must be debited and common stock must be credited, right? So if some person says to you cash to common stock, so as an accountant you must understand that in this case which one is debit and which one is credit. Cash to common stock, it means cash must be debit and common stock must be credit. Okay, this is how we pronounce our journal entry. And when we talk about the posting, so posting already we know that 50,000 going to be here. In case of cash, in case of common stock, it would be here on credit side. So let me just remove it and we see a very nice writing. So we see 50,000 increase in assets, 50,000 increase in stockholder equity, equation is balanced. And if we post this entry into, if we record this entry in journal entry, that would be cash to common stock. This is also debit is equal to credit. See, 50, if we just add here, 50,000 would be equal to 50,000, right? So in that case, you can confirm this equation as well. This entry gonna equate of